Okay, we're starting the broadcast a minute or two late here. I encourage everybody to get out and vote next week for sure. I think that Senate race in West Virginia is going to be interesting. I think it's a dead heat right now with Morrison and Cheney, whatever his name is. Be interested who wins it. And then that Congress race too, that'll be interesting. So forth. I think Trump's going to come back to West Virginia one more time, maybe this week. So I wouldn't stand in line and get in that crowd for no president. So they pour out for him. Anyway, who's your advisor, Clayton?
You.
Jonathan? Who's your advisor?
Steve.
Cole? All right. Y'all need to sign up on my door there to register sometime this week. And if you don't get to, I'll put another sign up for next week later. But pre-registration for 2 weeks. We'd like to get everybody pre-registered. Sometimes it makes a difference if a class goes or not. And it also gives you 5 points bonus on your final test grade in this class. So on. So code for springtime, you're completely changing your major. Now, are you going to be here this spring or are you going to be at Concord?
Probably here.
So you'll be here at least this spring. Okay. Now, do they have here what you want to major in?
Not major. I could get something close.
Does Concord have what you want to major in? You want to major something to do with math? You like math?
Pretty good at it.
Did you take calculus and trig and geometry and all that in high school? Do well in it? Good. All right. Well, accounting is not for everybody. Biology is not for everybody. There was courses I didn't like. I avoided math. Didn't take it as a freshman or junior. Only had algebra 1 in high school and bonehead math in 10th grade. I dreaded it. So somehow or another, I got through pre-calculus and statistics. And then when I went to graduate school, I had to take advanced calculus. That was rough. But then I got certified in the public schools to teach certain math classes. And that's one I avoided, but I do like math. I wish I'd taken more of it at the time. But some things I didn't like. I didn't like history. Let me back out of this a minute. But Cole, we hate to lose you. There's so many few. See, are you all juniors this year? Sophomore. There's so many few sophomore accounting majors. I'm going to put a pretty good group coming up in accounting principles now for next year's intermediate and taxes and so on. But that's next year. Here we go again. My PowerPoint. They never did get that straightened out with the company. My PowerPoint for this chapter 9 doesn't work. So Cole, when you and Jonathan register, don't forget to register for VITA. That'd be an elective or an internship, whichever. We lose Cole, but let's see, we've got Hillary left and Turry and Matthew Green. And I have another call to return today for some lady wanting to take accounting 350. Well, she's got to have 325 first. I got a call from IRS today and asked were we on board to do everything. They'll send us the software and so forth. All right, in this chapter, we just finished a little bit on more about property, more about losses and bad debts. We looked at a lot of problems. We have time, we'll go back. But we're going to look at chapter 9, business and employee expenses and deferred comp. We usually know a business expense from an employee expense. All right. But if you look down on page 9-2, some of the more frequently encountered employee expenses: travel, transportation, moving, entertainment, education, office, and the home. Now, some of these are itemized deductions, okay? And let me get past these types of employee expenses: reimbursed and unreimbursed. Now, if I went to Charleston to meet with the IRS in the line of duty for the college would probably pay me. They'd probably reimburse it. All right. And I have no tax write-off. All right. Now, if they unreimburse me, I could take travel so much a mile and take it off on, it's called a 2106, and take it off as an itemized deduction. So that's what we're doing in some of this chapter. We'll still be subject to the 2% of AGI. But now other expenses, tax preparation fees, that's under this 2%. You get to deduct it. A maybe here and maybe here. Deductibility of travel expense. All right. Now, if I have travel expense where I do tax work, if I deliver a tax return, or if I pick up a tax return, and let's say I drove 200 miles, how much do I get a mile for that? Now, that's one thing I want you to look up right now. How much do you get a mile for travel? Now, we know it's different for medical and dental, and we know it's different for charitable contributions. So in this chapter, under travel, last year was 57 cents a mile. Let's see. Under the new tax deal here, has anybody found it yet? Under travel. Maybe under transportation. Oh, it's under travel. I don't see it right away, but let's assume that's around 56 cents. All right. Here's what I would do if it were on my Schedule C, self-employed. That'd be $112 I'd take off as an expense on my Schedule C. But if I travel 200 miles for Bluefield State, I still get to take 56 cents a mile, maybe.
54.5.
Well, I was close. They changed a little bit. Gasoline prices must have went down. All right, so that would be $109. All right, I would take that $109, and that decimal, of course, goes here. That's 54.5 cents. I would take that $109 off of my Schedule C. Straight off. All right, that might equal the income or most of it I got on that return. Now it says no floor, you see, because I took it off 100%. But now if I was doing that for Bluefield State, I'd take it off from my AGI. Now that would have the 2% floor. Now, if it's personal gasoline, coming to college here is personal, isn't it? And me coming to work here is personal. It's not deductible. Now, if I went from here, let's say to Beckley to teach a class tonight, a second job, I can take that gas mile for a second job. Expenses must be business related if it's for travel. You must be away from tax home for a sufficient duration. For the gas mileage, you don't have to be away from home overnight at all. All right, away from home requirement, travel expenses are deductible. Tax home shift to assigned workplace, travel expenses may not be deductible, but it's usually here. Now, let's say these construction workers are sent down into Florida to help rebuild. They can take travel expenses. They can take their motel expenses while they're down there because that's not their ordinary place of work. For AGI, if I travel for rents, if I have to travel 500 miles a year to pick up rents, I take it on Schedule E, and it's for AGI. All right, if I travel and deliver those tax returns, it is for AGI. All right, but now if it's an employee-related expense, it's the 2% floor, and that's a big old from. There's only one from now, itemized deductions. Now you can go home and go to another job. That's what they're talking about. Now, Jonathan, you found how much a mile? And this book says 53.5. Your book, that's correct. Remember, I'm looking at old PowerPoint. I'm looking at an old PowerPoint 2018 instead of 19. All right. Now, at this point, I got to bring up a form from irs.gov. Well, I'm trying to bring up a form. I'll probably have to go to irs.gov after all. Well, I want the form itself, so I hope this brings it up. All right, now look at this form. It's quite simple. Now this is 2017 taxes. Now, who uses an automobile? A salesman might use his automobile a lot. Okay. Now, when I was in public schools and I had marketing, street education classes, John, did you have something like that? You didn't have co-op and marketing, did you?
Yeah, they did have it, but I didn't think it.
But the school reimbursed me something like 15 cents a mile. And I got to take the difference. I use my car every day in the business students at work, or to talk to an employer, or just find a job or something. So if I went to meetings, I got so much a mile. All right. Now we could do vehicle expenses. Now, if I were going to Charleston, West Virginia for the college, they don't reimburse me. I can put down fees and tolls. Was it take $6 to go from here to Charleston and tolls? I think there's three of them at $2 a piece. All right. Now, travel expenses one away from home more than not. That's lodging, airplane, and car rental. All right. Now, business expenses not included on line 1 through 3. Meals and entertainment are separate. So that's some of the travel expenses you get if your employer requires you to travel and don't reimburse you. You can take it off on your taxes. That's what it's all about. Now, here, you'll be filling out one of these. If you're reimbursed anything, you include it here. Okay, now here is what I want to point out to you. If you're going to take your vehicle deductions, you can, let's see, business miles. Now, this is just so much a mile, I think. Standard mileage rate, yeah, according to this book, was 53.5. Now, you can take the standard mileage rate or you can take the actual. Now, the actual, you have to keep up all your gasoline, rentals, depreciation. Now, you think 53.5 cents a mile, 54.5. Now, you drove 1,000 miles. What is 54.5 cents times 1,000 miles? Is that $545? Now, in 1,000 miles, will you spend that much on gas? It'd probably be better to take the miles. But now, however, I did taxes for a couple of letter carriers, post office workers. They used their own car. But time I took their insurance, they used it 100% for business. Time I took their insurance and depreciation, they wore out brakes every 6 weeks, stopping every box up all these mountain roads. Their actual expenses worked out better than 54.5 cents a mile. All right, so you have a choice, and it's got a place here for depreciation. Now, when we bring this back over here to the front, if it's employee business expenses deducted on Schedule A, Form 1040, all right, Now, if it's business expenses, Schedule C, I don't even fill this out. I just put my miles down times 54.5 cents, deducted as an expense, under other, under my Schedule C. So this is the form we're looking at in this chapter, 2106. Finally, back to it. All right. Now, in addition to your standard mileage rate, which is 54.5 in your tax, you get parking and tolls, interest expense, and personal property taxes. Now, you get all of these over here too. You get the interest expense and personal property taxes. Meals and entertainment. Now, you're going to take 50%, whether it's business or employee, 50%. Now, what are some of these entertainment? Now, business deduct up to 25 per donee. All right. Jonathan, you work where? Did they give you a Christmas gift? Not a bonus or nothing? Well, a lot of places give a turkey or a ham for Christmas. But usually they could deduct up the cost of $25 for that turkey or ham, or maybe a $2 bag of nuts or something. But more than 25 disallowed. Now, this is not subject to the 50%. Okay. Employee achievement awards that are under 400 are deductible. So when you retire, Food City or Kroger, when you retire at Food City, I know you won't. Crazy if you stay there that long. But if you did, they give you a gold watch. They can deduct if it's under $400. You cannot get a gold watch under $400. I'll tell you that. Can't get a gold anything under $400. All right, your employee expenses, you got to be accountable for it, substantiate it. Per diem, we'll look at the per diem. Now, while we were on travel there, did you all see a per diem? Page 9-6 somewhere or 9-7, a per diem. It's in there somewhere. We'll point it out when we get into chapter. But per diem, they allow you like $30 of food a day. They allow you $30 of food a day, or they allow you certain meals and so forth. Maybe $60 a day on a motel. I don't know. Now, moving expenses. What pages are 1040 on? All right, doesn't matter. Moving expenses is 4. It's on the front of your 1040. It's 4 AGI. Now, I want to show you a moving expense form. Now you can read this form pretty much, but now what does it say right here? What does it say right there, Hillary? 2018. All right, they've got that form ready to go. Now this don't look like all of it, but transportation, storage of household goods, travel from your old home to your new home, enter the total amount the government paid you for the listed items. All right, you cannot deduct moving expenses. Yes, subtract line 4, enter the result here, and on schedule 1, form 1040, line 26, this is your moving expense deduction. All right, this don't look good enough, but it may be. Now, let's say Kroger transferred John. All right. If they transferred him to another state and he has to hire a moving van, it's deductible. If he hires a U-Haul to take his stuff, it's deductible. And it's for AGI. All right. Now he may just decide to take a job somewhere else. It's still deductible. They quit allowing meals and so forth. But now travel here includes lodging from your old home to your new home. If he was going to California, he may need to stay over a couple of nights to get there with his U-Haul and his new wife. All right. So moving expenses are deductible. Now, then we're going to look at business versus pleasure. They got to moving expenses too quick. So look at page 20, if you would, in your textbook, page 20. Prior to 2018, a limited amount of moving expenses were allowed if the move was related to a new job or business. Now, what happened in 2018? Look at example 40. Ken retires from the job and moves from Tennessee to Arizona. His moving expenses are non-deductible because he's just doing it for pleasure. But now these two conditions they should have had on that form. Okay? The new job location must be at least 50 miles further from the taxpayer's old residence. Let's see now. Look at that first condition. The new job must be at least 50 miles further from the taxpayer's old resident than the old resident was from his former place of employment. Now let's see if that makes sense, okay? All right, here's job 1. Here's home. Here's job 2. Now, job 1 is 30 miles from home. How much does job 2 have to be in order for us to be able to move and get moving expenses? What? All right. Hillary read that correct. 50 miles further means 80. 30 plus, okay. All right, that's one condition. Read that next little part there. What's the second condition for moving expenses? Second condition, 39 what? 39 weeks. You got to stay on that job. If you're self-employed, it's 78 weeks. Definition of moving expense: the cost of moving household goods, the cost of traveling, and the expense. Now, they have shortened that down. So that's pretty good. So that is an adjustment for. I got a new boss one time at community college, a new dean. He lived in St. Louis. He had a mobile home, and his wife liked that mobile home. Do you think it costed very much to move a mobile home from St. Louis to Virginia? About $8,000. It would be tax deductible. And that 4 is money he's not paying taxes on. If he was in a 25% tax bracket times $8,000, he saved $2,000 back on his moving expenses. But you know what happened to that trailer on his way? It did get hit and got damaged, and he got it fixed. But the wife liked that mobile home, and she wanted to take it across the country. All right. So for and from. If this is it, it's a simple form this year, folks. It's a simple form. I'm surprised for deductible 4. Now, if an employer pays your moving expenses, just exclude them. Don't count them or whatever. And we're going to get to education expenses in a minute. But there's a page or two I want to talk to you about. Entertainment. We looked at the business gifts. Classification of expenses. I want you to look at page 98, where it says business versus pleasure. It didn't have a PowerPoint on that. Oh, that's not supposed to do that. All right. Here's a question for you all. You fly to France, 7 days. Airfare. Airfare, probably $1,200. Okay. You stay 4 days business. For your own business or for your employer. 3 days, you took a vacation. All right. Now, your meals, average $80 a day. All right. Some of those places you eat at may be $40 a meal. All right. Now look at that. Take a guess how much I can take off for business expense. How much? Okay, now wait a minute. Now your motel is $150 per night. Got any idea, Hillary, how to go about it? All right. Add with me here. As long as you went 1 day for business, you can take all the air flight. $1,200. All right. Now, 4 days of business times $80 in meals. You can take $1,200. You can take $320 in meals. 4 nights business would be $600. So you could take, it looks like $2,120 that you could take for business. So I did want to make that distinction from your textbook. Now, at one time, IRS was real liberal. You could fly to France because you were a French teacher. If you went to France and stayed 1 summer to learn French better, then some of these teachers would take off a whole lot of business expense. IRS cracked down on that too. You can't just fly to France and stay all summer because you're a French teacher. You want to learn French better. Well, I saw something last night on Monday Night Football I hadn't seen before. Did y'all ever watch Sunday Night Football? Watch it last night? Okay, it was New England. I just watched a little New England and Buffalo. And New England probably went pretty bad. Okay, but I've got ESPN on channel 20 and channel 21. And on one channel, they were announcing in English, and I've never seen that other ESPN. The whole announcement was in Spanish. Did you see that?
I did.
Did you see that before?
No, I've never seen that.
So we better start learning Spanish. All those caravans come in here, we'll just have everybody speaking Spanish. All right. So I don't know why that's not bringing me back my PowerPoint. All right. Now, entertainment facilities, if a business has them for their employees, they can deduct a lot of that. Now, moving expense, we looked at real quick. Now, education expenses. Education expenses. Now, when I was teaching in public schools, I got my MBA and I took off all the expenses on my taxes because it was job related. Then I went on and got certified for supervision, certified for marketing, and even certified for just education classes. I deducted all that. Now, we'll look at these tax credits in chapter 14. Like Cole's parents could get a tax credit for him, or if Cole wants to, Cole could take the credit for himself if he's earned enough money and so on. But now we know that student loan interest could be deducted for. Student loan interest can be deducted for AGI on the front of the 1040. All right. But now we can deduct other things also. Certain tuition we can deduct on the front of the Form 1040. Now, let's look at a couple of rules. For education. Look at page 22 in your textbook. Most education deductions were not affected by the 2018 Act. Two changes were made. Education expenses allowed to a taxpayer in pursuit of an employment-related activity were deductible prior to 2018 as a miscellaneous itemized deduction subject to the 2% of AGI. Since miscellaneous itemized deductions have been suspended, these education expenses are not deductible for employees in 2018. They continue to be deductible for self-employed people. So, overall education expenses are considered personal expenses and therefore are not deductible. So they've changed that a little bit. It sounds like we're going to lose that 2% floor on some things too once we get that real form. All right. General requirements for deduction, page 24. The expenditure is incurred to maintain or improve skills related by the individual in his or her employment, trade, or business. Okay, Jonathan's out there working as an accountant. He takes a night class in taxes, new laws. It would be deductible. It's to improve his skills. That's why all mine were deductible. They were to improve my skills. I was still in the teaching profession. All right. The expenditure is incurred to meet requirements imposed by the state or by the employers for retaining. Okay. Back when I was in the public schools, they came out that teachers had to have 3 credits in economics. Of course, I was teaching economics. I had a lot of the teachers in some of my classes. Now, since that was a new requirement, their expenses for tuition and books and travel was deductible as education expense. It was job related. Now, Jonathan gets his degree. He wants to pass the CPA. He travels to Charleston to sit for the CPA. Those expenses are not deductible. It's still in his trade or business. Now, getting your BS degree in accounting is not deductible until you get qualified for the job. Okay? Now, I told you, this tax class, if an outsider came here to take this tax class just to improve their skills and do their own tax return, they can deduct the cost of tuition, books, and travel for this tax class. The education is required to meet minimum education requirement. Now, even if one of the 2 requirements above are met, education expenses are not deductible. The education qualifies the taxpayer for a new trade or business. Now, so you're in marketing. You want to take some accounting classes and switch careers. That qualifies you for a new job or business. It is not tax deductible. Okay. All right, now real quickly, office and home. office, and home. We slightly mentioned this before on itemized deduction. All right. You got to use that office for business. And it's not just an office in a home. I may be storing some of these Tupperware. I may be storing Sarah K or whatever it is, Murray K. I may be storing home interior stuff. I may be doing arts and crafts in a home and using a room that works the same as home office. Now, once I retire here and I keep doing taxes, I've got a room in my home just to do taxes, computer and so forth. I can deduct home. For this job, I can't deduct office expense because I've got an office. They furnish me an office. But if I were working at Bluefield State and they did not have offices, then I could deduct an office at home. I could use it to do a lot of my work, prepare tests and so forth. So, all right, so look over it. You know you're supposed to read chapter 9 for Thursday, of course. Start working the even problems, of course. All right. Office is located in a separate structure, not attached to the dwelling. That'd work. Now, even if you have a doctor's office in your home, or I have known of women to have a beauty shop in their home, you're going to take off a part of that home. And it says patients and clients and customers. A doctor has a patient. Investment counselor has a client. Belk has customers. All right. Now, if you've got a flax line for the office and printing for the office and supplies for the office and a computer for an office, these are direct expenses. But now you may have to prorate your insurance, utilities, taxes, and maintenance. So for a home office, you could take rooms. If you got one room out of 6, you could take 1/6 of your utilities, real estate taxes, insurance, and maintenance. But let's say you do by square feet. You've got a 2,000 square feet home, and 400 square feet is for your office. All right, divide 2,000 and 400, what do you get? What percent? Divide 2,000 and 400, what percent do you get? What? Now, Jonathan, did you say 20 without picking up a calculator? About time. All right. 20%. You get 20% of utilities. Now, when it comes to cell phones, if you have to have a cell phone 24/7 from your business, you deduct it under home office expenses. So home office requirements. Now look at page 25 as a backup plan here. They give you general requirements for deduction. The office is used in the principal place of your home. The office is used as a place for meeting. The office at home is located in a separate, don't have to be. All right. Where do we deduct these things at? Look at the bottom of page 26 and you'll see where we deduct them. Deduction for home office expenses are computed using the following 2 categories: expenses directly related to office and expenses indirectly. Now, direct expenses include expenses that relate solely. Now, to compute the office in a home deduction, taxpayers first subtract all expenses not connected with the office from the income generated by the business. All right, now, if I'm doing a Schedule C and my income for a certain business was 10,000, if my home office comes up, that may be my gross profit other than home office. My home office comes up to 2,000, then I'm only taxed on $8,000. So it pays me to take home office expenses on a Schedule C small business. But if I'm not a small business, what do I do? Look at example 54. Julie works as a full-time employee for a local company. She also operates a mail-order business out of her home and maintains an office in her home that is used exclusive for business. The size of the home is a total of 2,400 square feet, and her office is 300. Well, don't have to do that in your head too. 300 divided by 24. $300 divided by 24. Anybody? Take your calculator, Jonathan. Take your cell phone, Jonathan. Divide 300 by 24, and I think you'll get 12.5%. Okay. All right. Now, during the current year, she generates gross income of $18,000 and had $6,000 business expenses, supplies, and shipping charges. Now here she had paying the office $600, decorating the office, mortgage interest on real estate taxes, insurance, utility depreciation. Now she could take her direct expenses for that office. She could take the painting, and she could take the decorations. Now the mortgage interest, she only gets 12.5% of that. 12.5% of the taxes, 12.5% of insurance and utility and depreciation. That's another $1,100. But she gets $2,600. Now take that on a Schedule C. And that cannot exceed your net income. Had her net income only been $2,000, she could have only deducted $2,000. All right. We're looking at some pretty big expenses here. We're looking at education, home office, travel, entertainment. Those go under employee business. This chapter goes along with chapter 7, itemized deductions. Now, types of deferred comp. All right. Whatever the college has here for me, I put in 6%, and they put in 6%. I'm not taxed on either percent, it's deferred. So someday I'll have to pay taxes on it when I draw it out. Okay? I'll have to pay taxes, I'll tell you that. But it's deferred. Now, at the community college, I had a state retirement plan that disqualified me from taking out an IRA. Now, if I were self-employed, I'd take out an IRA or some other retirement plan, which would be tax deductible. Now, if I'm an employee and they got no retirement plan, then I can take out an IRA. If they got a retirement plan, I can't take out an IRA, but I can get something under deferred comp. I don't know what I had at community college, like a 401B or something similar to 401K. But I had to take out so much a month, and folks, it grows. It grows. The stock market right now is going down. We can't help that. Okay, qualified plans, pension plans, profit share plans, stock bonus plans, you're okay. If that retirement is taken out on you, it is not tax deductible. I mean, it is tax deductible. It's not taxed. Now, this is a self-employment retirement plan. And IRAs, they're tax deductible. Do you know, Cole, are you 20 yet? You'll soon be 20. Now, if Cole took out $2,000 a month IRA, they allow more than that. If he was working now, just $2,000 a month, not the limit of 5. And he kept it in there 40 years, and he'd be 60 years old. He'd be a millionaire because that $2,000 a month can really grow, can't it, in retirement plans? I put $5,000 in a Fidelity Magellan plan. $5,000. And right now it's worth $80,000. That's in a retirement plan. All right. I paid $19, I may have told you before, for Disney stock a couple of weeks ago. It's probably went down now because the market went down, but it was selling for about 106. All right. Not a bad gain. Dr. Sneed, he took some of his retirement in the state of West Virginia. I've got mine in stock. And the Dow was up. It went down. He bought. But he got back out of the stock market. But I stay in the stock market for the longer run. Okay? Even if I died, I'll leave it to my grandkids in a will, but they'll have to leave it in the stock market. I'll make it so they can't take it out at that time and waste it. Types of qualified plan: regular pension plans and profit sharing and bonuses. Plan pays a fixed benefit amount. All right, definite. Now, the state of Virginia, we used to have to pay in 5%, and the state paid in 5%. Now, however, the state started paying this other 5% for us. So the state paid the whole 10%. We were not taxed on that 10%. But since I retired from the state of Virginia, I'm taking it out now and I'm taxed on it. Mr. Imels even taking some out. Now, however, once upon a time, I had to donate 5%. Now, I was taxed on that 5%. So I'm not going to be taxed on it again. Don't want to be. So the state works out a formula. If they paid me like $1,000 a month, you know, maybe 100 of that was not taxable, but 900 is. A person working at Bluefield State, let's say they hire somebody, bring them in at $60,000. If he puts in 6% of that salary, that's $3,600 a year. Bluefield State matches that. If he don't put in 6% a year, he's losing $3,600, isn't he? It's really financial ignorant and wasteful, and almost on the verge of being a blooming idiot. If you don't take advantage of that and get yourself an automatic raise of $3,600. A lot of people don't. A lot of people don't take advantage. You're going to have to read about these plans. Now, a Roth, you're taxed on the money you put into a Roth, but you're not taxed on the interest until you take it out. Or unless you take it out for education or maybe medical. Don't Walmart give their employees a bonus of stock? It's like a profit sharing plan. You're going to have to read this chapter. We're going to have to look over these plans. But there's plenty of plans for self-employed individuals. Okay? How much can you put in your retirement plan a year? 54,000 or 25% of your income. That'd be a big tax deferred, wouldn't it? All right, now the traditional IRA, if you're working somewhere, now Jonathan does not have a retirement down at Kroger, do you? The Kroger or Food City? Yeah, Food City. I get off on Kroger, and I know it's Food City. Down in Food City, he doesn't have retirement. So here's what he can do. Even now, as a part-time worker, you can put in up to $5,000 a year. All right, but you can't go over your income. That's a none, but that's if you got another retirement. Deductible IRA, here is the amount. All right, now Roth IRAs you can't deduct. Just the interest. All right, withdrawals here are tax-free. If you're 59 and a half, if you're inherited, if you buy a home. Education savings account, we'll stop it on that, and there's a health savings account, and that's pretty much the chapter. All right, we need to look at some details in this chapter come Thursday, and we need to look at some details and problems come Thursday. So we're ahead of schedule, folks, and taxes. We're definitely ahead of schedule, even though November is here. And we've got 1 month to go. I am not going to cover any more than chapter 10. So we're keep staying ahead of schedule. We may have our exam on the last day of class. We won't have to come back for a special exam day. How'd that be? All right, Hillary, were you going you signed up for your schedule today? All right. Clayton, Jonathan, Cole, sign up for my door for some kind of appointment this week, okay? And Terry, we need to get your schedule, and Matthew, we need to get your schedule.